Good morning. Thanks so much for tuning in. This is Buy Now, Sell Now on ET Now. My name is Alex Matthew. With me is Cheryl D'Souza. Let's quickly take you through how the markets are faring right now. Well, it was a negative start for the Indian equity markets, and that is more or less in line with its global peers after the sell-off that took place in tech stocks in the US last night. That spread to the Asia-Pacific region, and indeed we have not been left untouched. This, of course, is coming after several days of us trading in positive territory. In fact, in yesterday's session, we also saw foreign institutional investors nibbling in. So therefore, in 2 out of the last 3 sessions, you've had foreign institutional investors net buying. And that's a pleasant change from what we've seen over the past month or month and a half. Now, what are the stocks that you have to bear in mind? Or rather, let me just tell you about the sector since Cheryl is going to take you through the stocks anyway. You have quite a few of the sectors that are trading in the red. Only the pharma space is trading with a slight positive bias. In fact, even that has given up some of the gains from earlier in the session. And you have the Realty index that is doing reasonably well. Media is also trading in the green, but the rest of the sectors are trading a little bit weak, particularly the metals counters, which have been gaining significantly over the past several sessions. They're losing a little ground today. So perhaps to a certain extent, you can attribute that to profit taking. Cheryl, what are the stocks that you've identified today? Good morning.
Good morning, Alex. A couple of stocks that are buzzing in today's trading session. In first half, I will talk about PNB. The lender has launched the proposed QIP at a floor price of 35.51 rupees per share, and that particular stock is down in trade. Along with that, you have Intellect Design. That particular counter is falling on back of its Q4 earnings. You have Indigo that is in focus on back of its QIP. You have Bajaj Electricals, massive surge coming in on that counter. That's because Morgan Stanley has initiated coverage on Bajaj Electricals with an overweight rating. JSW Steel, the stock is under pressure today. Crude steel production for April has declined 5% on a month-on-month basis. Also, their average capacity utilization during the month was at 91% compared to 96% in March. And this is due to the diversion of oxygen for medical purposes. So that's the reason why their average capacity utilization has declined. Chambal Fertilizers is in focus on back of earnings. You have GCPL that will be reporting its earnings today. So focus on that as well. Along with that, Granules also will be reporting its earnings today. But you know, of late, Alex, one particular sector that has been seeing a lot of buzz around, and that is the textile sector. Be it Trident, be it Indocount, be it Welspun India, you name it. All of those textile companies have seen massive surge. But what's actually aiding this surge, and what's the factors behind this likely uptick coming in the textile names? Vinny is here to help us understand what's exactly happening in that sector. Good morning, Vinny, and shed some light on what exactly is happening in the textile sector as of now.
So Cheryl, rightly mentioned that, we are seeing a buzz coming around this textile sector, and, there are a few positive triggers that, which could be leading to this positive move in the stocks as well. One, obviously, you're seeing that, revival in the US as well as the UK markets is something that is very good for Indian textile companies, especially exporters. So once these markets are opening up, that is surely a positive trigger coming in for our Indian textile players. Other than that, obviously the China Plus One strategy, that is something that has spurred the demand even in homes textile segment and other textile companies as well. Whether you see cotton production also, that is mainly used to come from China. Now that also does help Indian players because of the ban that is US is putting on China imports as well. So that is something interesting. The China Plus One strategy surely works out for Indian players very well. Now, other than that, cotton prices seem to be now finally stabilizing a bit. So this stable move is also something that will finally be helping Indian companies as well, Indian manufacturers as well. Other than that, the increasing spread that we're seeing between the Indian and China are favorable for Indian manufacturers as well. The cotton spread that we're seeing is favorable for Indian manufacturers as well. Yarn prices, now moving forward to yarn production and yarn prices, where yarn manufacturers are at an advantage because you're seeing a benefit from both, and a good demand from both domestic as well as the export market. And domestic market, yarn manufacturers see good demand. That is quite beneficial for yarn manufacturers as well. And the pricing over there is also quite good. So both these demands in export as well as domestic market aiding the yarn manufacturers. And yarn prices obviously higher is benefiting yarn companies as well. So overall, that is those companies in the textile space are moving as well. So all in all, a lot of positive triggers on this front, and this is surely improving the textile companies' prospects going forwards as well. And these are the main triggers that are there for textile companies.
Thank you, Winnie, for taking us through what's actually likely aiding the performance of these textile companies, the stock price movement as well. You've seen stellar returns come in for most of these textile counters. And to kickstart the discussion and the spotlight being on the textile sector, I'd like to bring in both of our guests today, Kunal Bothra as well as Vikas Sethi. Thank you for joining us this morning on Buy Now, Sell Now. Kunal, I'll come first to you, and let's talk about these textile stocks name. Be it Trident, Indocount, Wellspun India, Ambika Cotton as well. If you see the stock price movement is very astonishing. You see the 1-year chart, YTD, 6 month, 1 month, even 3 days for the matter of fact. What's actually the charts telling you? What is actually aiding this bullishness on the textile sector?
So good morning, Cheryl. Good morning, everyone. Well, I believe that there are a lot of factors which are actually aiding or helping the move on textile stocks. One of them, of course, is what's happened to the individual names and the strength in individual stocks, especially the large cap names from that space. But the other and the most important part is that these stocks are now getting a lot of traction because of the phase the market is in. That a lot of mid caps and small caps are doing pretty well. So if you can look at the charts, what I've mapped up is the comparative price patterns for many of these textile stocks, right from the likes of Trident, Vardhaman Textiles, etc. Many of these stocks, have done phenomenally well. In fact, if you can look at the charts, the pace of rally in the last, 1.5 or 2 months has intensified for these stocks. So if you can look at from the March 2020 lows, and you look at the, set of distinct outperformers, there was a phase where, KPR Mills outperformed till, June, July, 2020. Then it was followed by, rally in Vardhaman Textile, Wellspun India, then gained traction. Arvind Mills outperformed. So it was a mix and match which was happening in the sector. But now if you could look at the charts, almost all of the stocks are rising in unison. So this is a very strong indication of a strong sectoral push. So from those earlier fragmented stock-specific approach, it's now becoming a very strong sector move for the textile overall.
All right, thanks so much for that picture. In fact, it is quite a rosy picture for the textile sector, at least on the charts. I want to come to you now, Vikas. First of all, good morning and thanks so much for taking the time. We've set the context somewhat in terms of a conversation already on cotton prices, yarn manufacturers, but let's talk about it a little bit more in detail. What, according to you, are the factors that are contributing to this optimism on textile companies? Is it the fact that you have a bounce back in demand from the markets abroad? So the exporters from India are looking good. You have the ban on cotton imports from the Xinjiang province in China from the US. And you have cotton prices in India that are supportive. And in context of all of this, what, according to you, are the stocks that you have to bear in mind, and what would you place your bet on?
Yeah, good morning, Alex. Good morning, Cheryl. Yeah, as you rightly pointed out, the factors which you are just mentioning, there is a tremendous demand from buyers from the US, Europe, and ever since this the pandemic began and with the kind of lockdown which we have been witnessing across the world, buyers across the world have been looking for an alternative to China. And therein, Indian companies played a big role. And I think this demand from Indian companies would continue to do well. And this has been reflected in the results which have come so far. So I'm bullish on the textile sector, and particularly the home textile segment, which is doing really well. And companies like Trident, like Wellspun India, Himmat Singha Seed, they've been doing exceedingly well. So I'm bullish on all these stocks. And the two stocks which I would like to recommend to investors today would be The first one would be my all-time favorite. The name of the stock is Ambika Cotton. Actually, I'd recommended this stock on your channel closer to around 750 odd levels about 3 to 4 months back, and from there it has just seen a very good rally to levels of 1170 today. But I think there's still a lot of steam left. It's a great company, a fundamentally solid company with all fundamentals in place, quality balance sheet, good return ratios, and I think with the kind of demand which it's witnessing for its product, and it's an export-oriented company, so I feel this would do well in the coming days also. So I think one should be buying into the stock at the current levels of around 1170, or at every fall one should be accumulating this stock, and my targets are 1500 rupees on the stock in about 9 to 12 months. And the second stock which I like is Welspun India. This is into home textiles, a leading company, again fundamentally a good company, and home textiles is witnessing tremendous demand from US buyers. So these kind of companies like Welspun India, Himmat Singha, Seede, or Trident, they would do exceedingly well. So I'm bullish on Welspun India even from the current levels, and despite the fact that the stock has seen some upside recently, but I think one can easily see levels of 150 in the next 9 to 12 months on this stock as well.
Vikas, a small point just to drive home the point of the optimism in the telecoms, the textile space, particularly for those that are export oriented. Definitely the currency would be something to watch out for, both in this current quarter as well as in the remainder of this year, right? If the rupee depreciates further against the US dollar, that's a huge positive. But on the downside, would you say that if you have continued problems with regard to the pandemic, you could have that affecting merchandise exports? They haven't yet affected from what I have seen.
No, that certainly would be something to look at or something to be cautious about. But then we've been seeing that these kind of things can only keep you or can hold you back for some time. But if you're a long-term investor, I think these are good companies and they would continue to do well. Even if lockdown, say, extends or it intensifies, I think this would come back and there'll be a pent-up demand, and I don't think there would be any problems for these kind of companies. So I'm bullish on the sector as a whole, and within the sector, these companies would do well. And there could be some hiccups. So that's why I'm saying any correction should be used as a buying opportunity or to accumulate or to average down your cost further.
Fantastic. Okay. On that note, let's slip into a short break. But on the other side, we'll get you the high risk and low risk ideas from our experts. And we'll also take the queries that have already started pouring in on our social media platforms. Be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And before we get started with the query segment, let's hear out the high risk and low risk ideas from our experts. Kunal, let's start with you. What are the ideas for our viewers today?
To highlight with the buy on Coal India, that stock looks fairly attractive to me on charts. 2 days of consistent momentum, PSU index overall doing exceptionally well. So I'm sensing that this could be a start of a bigger up move for Coal India. Monthly charts so far are indicating a formation of a bullish hammer as well. So this could be a big breakout for Coal India. Targets of 170, stop loss could be kept at approximately 145. The second stock which I would suggest is a buy on Canara Bank. Even the PSU banking index is making a consistent dash. Canara Bank is breaking out of the 50-day moving average. In fact, yesterday also the stock had a touch and go movement towards this 50-day moving average. Today also it's making a second attempt. So I'm sensing that even the PSU banking pack could start to outperform near term. So buy on Canara Bank, targets of 170, stop loss 145.
Vikas, what are your ideas for the viewers?
Yes, my ideas would be long-term ideas. I would recommend viewers to be investing into these companies from at least a year's perspective. The first stock which I'd like to recommend today is GSFC. It's a fertilizer and chemical company owned by the Gujarat state government, a leading company and with solid fundamentals. What I like about the stock is the valuation of the stock. The company's market cap today stands at close to around 4,500 crore. Whereas if you see its revenues for FY20, they were around 8,000 crores. So if you look at the market cap to sales ratio, it would be 0.6. And the stock has a book value of closer to 175 rupees and it quotes at 116, 117 rupees today. So again, from a price to book value point of view, it trades at just about 0.6 times. And I've learned that some of its products are in huge demand these days and the prices of these products have gone up recently. And with the kind of interest being witnessed in the mid-cap stocks, particularly fertilizers and chemical stocks, and this stock has not done as well as some other companies, I'm bullish on the stock and I think one should be investing into this stock at the current levels of around 116, 117. And my targets in a year's time would be 160 rupees on the stock. The second stock which I like is again an agri-related stock. The name of the company is Mahindra Epc. The stock currently trades at about 154. It's a Mahindra Group company which is a leader in the drip irrigation segment. This company is also into sprinklers, pumps, micro irrigation, then greenhouse, etc. And I think recently we've seen some 3 agencies confirming that we'll have normal monsoon again this year, which would be 3 years in a row. So that would certainly help companies like Mahindra Epc. And furthermore, its competitor in Maharashtra, I wouldn't like to name the company, that is not doing well or is in problems, which would be pretty positive for a company like Mahindra Epc. And fundamentals are really solid with the management of the Mahindra Group. I think one should be looking to invest into this stock at the current price of around 154. And my targets in a 9 to 12 months would be 225 rupees on the stock.
All right, those are the ideas that have come in from our experts. Let's jump straight into the query segment. And the first one I'm taking today is from YouTube. It's from Kijar Patel. Sorry, I keep saying your name wrong, Kijar. Your name is Kijar Patel. Kijar Patel is asking about Britannia, and this one's for you, Kunal. He's bought a Britannia call at 3,500 call at 40, and he's asking whether 30 is still a hold.
So okay, he's bought. I'm sensing that it's a current at the money call option for Britannia at 3,500. I think if you've bought at 40 levels, you can hold on to it. The stock is still holding on to its support levels. 33.50, 33.75 is a support for Britannia. So I think until the time the stock holds on and trades above this support level, there could be a possibility that you might see some late rally coming into the stock. But I think keep it very, very short-term oriented. I am sensing that this is more to do with a contrarian approach which you are having for Britannia. So keep it short-term oriented and keep a stop loss at 33.75, 33.50 zone. If the stock breaks this support level, then I believe that there could be more downside which you can see on the stock price.
Our next query is from Radesh. He is asking which steel counter should he look to buy, whether should it be JSPL, JSW Steel or Tata Steel. Which of these counters actually look good, Vikas, and make sense to buy for a longer term?
Yes, Cyril, as far as steel stocks are concerned, they've seen tremendous rally over the last 1 month or 2 months, and steel is witnessing tremendous demand, and it's in huge upcycle. It's a super cycle which is going on. And today we are seeing some correction after the action being taken by the Chinese authorities, banning or increasing margins in iron ore and steel trades on their exchanges. I think it's a good time to buy into steel stocks. I think this demand is going to last for a few more quarters. And from within the space, I think Tata Steel would be the best bet, followed by JSW Steel, SAIL, JSPL. And the other stocks from the metal space like Vedanta or Hindalco, Nalco, they also look good. NMDC looks very good. I think the stock has run up pretty well, but still this quarter's results would be mind-boggling, and I still continue to like this stock, and I think one could even look at NMDC on every correction.
Okay, the next question is coming from a viewer called Rice Bowl. I would encourage everybody who's tuning in on social media to tell us your name if it's not mentioned in your handle. So the viewer is asking Vikas about a company called Rana Sugar, and I have not looked at the financials. It seems to be a micro cap stock. But let me ask you, if you, first of all, if you have coverage, then maybe you can comment on it. If not, then comment on the sugar space as a whole. There have been certain factors like the ethanol production and the boost to that effect that have caused quite a few of these sugar companies to see a lot of optimism in the recent past. What, according to you, is the factor to watch out for here, and which stock would you buy?
Yeah, Alex, as far as Rana Sugar is concerned, this is one stock which I do not cover. There are umpteen number of other sugar stocks which are pretty good quality stocks and which I've been recommending every now and then on your channel as well as several other channels. As far as sugar stocks are concerned, they still look good. They've already seen a tremendous rally. Sugar prices have firmed up, and internationally also the prices have gone up, and that has led to a big rally in sugar stocks. And to add to that, the ethanol requirement is also huge, and ethanol prices have also gone up, and that is also working in favor of these sugar companies. But if I were to look at stocks from the space where one could safely invest into even after the run-up, I think one should be looking at stocks like an Andhra Sugar or an EID Parry, then even a DCM Sriram I like. And from pure sugar play, I think Balrampur Chini and Dhampur Sugar could be the stocks to be looked at. So these are the stocks which I would recommend from the sugar sector to be investing into even after the recent run-up.
All right, the next queries come from Shubh Mathur. He would like to know the opinion on South Indian Bank on the charts, as well as what is the outlook looking like for this particular account over the next 1 year. Kunal, how is South Indian Bank looking on the charts? And if you could also talk about over the longer term or slightly medium term, how the charts look like.
So, I think I remember that this stock was one of the few stocks which had remained quite a, I would say, outperformer, in the pack from the private sector banks quite some time back. So I think from 2010, 2012 onwards, or prior to that till at least 2017-18, the stock, used to, perform pretty well. But somehow I think, in the 2018 sell-off, where many of the mid caps started to correct, this stock also lost its way, and it went on to from a level of 34, 35 to almost as much as 5 rupees or slightly below that. So it's into a recovery mode. The medium-term charts are still going into a more of a repair mode for the stock. It's not showing any kind of a major trend reversals on the stock, on the price patterns at least. So I think around 14 and 15 levels is where you would see the first level of very strong breakout happening for South Indian Bank, and it's almost 40% below, or rather the stock has to move up 40% from current levels for the stock to break past above that major hurdle. So I think it's a stock which is, I would say, work in progress. Only about 14 and 15 levels, I believe any kind of a decisive conclusion could be made that the stock has reversed its major downtrend and could be in for a very strong uptick over the long term.
Okay, the next counter that I want to talk about is Alkylamines Chemicals, and this is a question coming in from Sahil on YouTube. He's asking whether it's a good time to enter, and what a stellar run it has been, right, for this counter, Vikas. Even in today's session, it's about 8.5% higher. What is your view on this stock? It's been a rank outperformer. Will it continue to outperform is the question.
Yeah, Alex, these companies, both these companies, Alkylamines and Bajaj Amines, they've seen tremendous run over the past year or so, and they've given multi-bagger returns to investors if you had invested, about a year back. And from here also, they would continue to do well, although valuations have started to look expensive after this kind of run-up which we've witnessed. Their performance is also pretty good, but then I think one could, if one were to buy into the stock or thinking of buying into the stock, then I think one could wait for some correction into the stock. Already up today by around 8%. I don't think this would be the time to get into the stock, but keep it on radar and look for any correction in the stock to be used as a buying opportunity.
All right, our next query is coming in from Palash Agarwal. He wants to know that India Mart is seeing some downtake. So he's asking whether he can go ahead and average holding in this particular counter. Kunal, what's your view coming on India Mart? Should Palash go ahead and average his holding?
Well, I think he may wait for some more time from 9,900. I think the stock has corrected to 7,000 level. So this is a steep correction which you're seeing into the stock price. I'm sensing, that on the slightly longer term charts, on the weekly and monthly time frame specifically, it's trying to complete a mean reversion process, and that completion could probably happen if the stock comes closer to 6,300 level. So I would sense that wait for maybe another 10% downside for the stock. Closer to 6,300 level is where you should look to average.
Okay, we've got a question from Samir Ganguly, and unfortunately, Samir, you've chosen 3 stocks. I will only pick one, and it so happens that several other people are also asking about Reliance Industries. So I will choose to ask about it, but I will get both a technical and fundamental view on it. So from the fundamental side, Vikas, we've got a question from another viewer. I think Jignesh is asking, would you buy into Reliance? Now, it's very hard to identify how would you value it as compared with other companies, right? Because it's an amalgamation of so many businesses. But what he's trying to say is, at some point of time, if there is a possibility of a demerger of some of these businesses, would you buy now in anticipation of that?
Yeah, Alex, if one were a long-term investor, I think one should be buying into Reliance at the current levels of closer to 1,925. I think it's a great stock to remain invested in. With the kind of performance which is being witnessed across all segments, whether it's oil and gas, whether it's retail or telecom, all the 3 businesses are doing well, and there are talks that these businesses would be demerged sooner than later, and that would be pretty positive for the stock. And then there are also talks that Aramco deal is also underway, so that could also come in. So if that is there, then I think the stock can, in the short term, also see an upside of 10 to 15% from the current levels. So I think one should be buying into Reliance at the current levels.
Okay, let's also get in a view from Kunal on the charts. Kunal, on the fundamentals, Samir says that it's looking like a strong buying opportunity. What do the charts indicate?
Well, the charts are saying that the risk reward for entering Reliance at current levels are quite interesting and skewed in your favor, because the stock seems to have good support at the 1800 1850 mark. But the question over here, Alex, is that if it's very, very short term kind of a time horizon which the viewer is looking at, then it's much better that you try and buy stocks which are in high momentum, or at least wait for Reliance to try and break past above its resistances. What has worked out in favor for the stock has been the good support at the 1800 1850 mark. But what has not worked in favor for Reliance Industries as a stock price is the falling resistance. So earlier 2300 was a resistance, then it was 2200, and now 2100 is acting as a resistance. So the resistances are falling for Reliance Industries, which means the supply is coming at much lower levels than it is anticipated for the stock. But then the demand is still holding on to that 1800 1850 mark. So you have to wait for which side of the demand of the supply buyers or the sellers which will give their way, and that will lead to a very strong uptick into the stock price. So assuming if 2100 gets taken out, then I believe a much more stronger reversal could happen for Reliance Industries. So I would suggest a wait and watch approach on RIL, and let the stock give you confirmation in terms of breakout, only then chip in.
Next query is coming from Pranav Dangi. He wants to know what's the long-term view on DFM Foods. Vikas, do you track this particular counter? Do you have a long-term view on it?
Sorry, Cheryl, I do not track this counter and would not be able to offer my opinion on the same.
All right. Kunal, would you like to take this one? How is the charts for DFM Foods looking like, in case you track it?
Even I don't track the stock, Cheryl. Won't be able to comment.
All right, then let's move on and let's take our next viewer query, and this is coming in from Nishat. He wants to know what's the long-term view on Tata Communication, and is it a good time to enter? Vikas, what's your take on Tata Communications? Makes sense to enter this particular counter right now, given that in the last 1 year it's seen massive rally coming in?
Yeah, Cyril, although the stock has seen a massive rally in the last 1 year, I think it's corrected also from its recent highs. And the current levels of closer to 1,080.90, I think it makes sense to be buying into the stock. I like the stock. The business model is good. and I think it could certainly do well from here. So I would recommend a buy on the stock and accumulate on every decline.
Coming back to you on this one, Vikas, you've already mentioned your view on the textile space, but you've got Ankit Garg asking about Raymond specifically. What's the view on the long term?
As far as Raymond is concerned, the stock has clearly disappointed. Their core business has not been doing well. It was a pseudo realty play also. They had some land in Thane which was giving them value. But within the space, okay, since most of the all textile stocks are doing well, this also would do well. But I think one should look for opportunities elsewhere. The stocks which I recommended, like in Ambika Cotton or a Welspun India or a Himmat Singha Seede, I think they would give you much better returns from the textile space. So I would recommend that one should switch from Raymond to one of these stocks.
All right, our next query is coming in from Merlin Pinto, saying that she's holding LT Foods at 75 rupees per share. Wants to know how long can she continue to hold on to this particular counter, and what is the 6-month view coming in for this particular stock? What's your view? How are the charts rather looking for LT Foods, Kunal?
Looking very attractive, Cheryl, because I think the stock had recently given that breakout around 62, 61, rupee mark. And I think post that it's moved up pretty well from 60, 62 rupees. It's now jumped up to almost 79, 80 rupees odd. So I think it's been a very strong and a solid breakout for L&T Foods or the NSE code Dawat. And I think in that aspect, it's possible that the stock may gradually move towards its all-time high levels, which is around 100, 105 zone. So it may take some time because the stock is going through a very mature kind of an uptrend. But I think over the next maybe 12 to 18 months, there is a possibility that the stock should come back to closer to 100 and 105 marks. So if you bought at levels of 75 odd, I would suggest that you can hold on. And if there are any corrections which come along the way and if the stock happens to come below that 75 levels, I think use some opportunistic dip as good buying opportunity again.
Okay, let's talk about Happiest Minds then. And one of the stories of 2020 in terms of what a great listing it was and what value it has given to its investors, young though they may be in the counter. Ankit Garg is asking, Palash Agarwal is asking about Happiest Mind. And Vikas, would you still buy at this level is the question.
Yeah, Alex, the stock has seen a tremendous run. It got a great response during its IPO also, and from there it has given good returns to its investors. But even from the current levels, I think the stock can do well in the coming quarters. I'm bullish on the stock, and with the kind of management which it has, I think the stock could go places even from the current levels. So I would recommend a hold or a buy on every decline. Since IT stocks are not doing well, I think the stock may give you an opportunity. It could come down further, and that would be a good opportunity to buy into the stock from a long-term point of view.
All right, our next query is coming in from Sagar. He wants to know the view on Rallis India. He's bought about 10,000 shares at 302 rupees per share. He's looking for a swing and a target for 400, and he's asking, is it possible? Kunal, what's the view coming in on Rallis India?
So I think on the monthly charts or the weekly charts, the stock is heading towards a breakout around this 310, 312 mark. I think the view has entered at a more of a breakout point or a swing breakout point just around the 300 odd mark. The volumes are also evolving quite well for Rallis India. So yes, you can hold on to the trade. And I believe the mid-cap, I would say mid-cap rally continues for the markets, even for say the next couple of months. Then there is a possibility that stocks like Rallis can give you a significant upside from current levels as well. So difficult to say that whether the stock will hit back that 400 mark or not. But yes, the chart patterns are quite strong and solid, and the recent breakout which has happened seems to be very credible and a strong breakout for Rallis.
Okay, Sagar, that answers your question. We've got another question coming in from, sorry, let me just get that. I believe it was LT Foods, but okay, Merlin has asked this question. Sorry, I lost my way there. Merlin has bought Oh, so Mohan is done. We've answered that question. Let's take a question from Rajiv then. Rajiv has bought Jyoti Labs at levels of 137, asking whether to hold for the long term or would you shift to something like a Tata Consumer? Vikas, I guess this is coming to you. Would you hold on to Jyoti Labs?
So I think this company also is doing well, but I think from within the space, stock like a Tata Consumer could give him comparatively better returns. But I think one could even look at ITC from this space. The stock is languishing since donkey number of years, but then I think its time also would come. And there are talks that it could also demerge some of its divisions, so that would give a big boost to its stock price. So I'm bullish on ITC, and the downward risk would be limited at these elevated levels in the market. I think one should look for opportunities where downward risk is limited. So ITC from the space looks good at the current levels.
Next query is coming in from Pawan Kumar. He's saying he's bought BHL 74 May call option today at 4.3 rupees. Now it is at 3.6 rupees. Should he hold or exit because he's purchased it at a high price, seeing the momentum? So what's your call coming in on this, Kunal, for BHL 74 May call option?
It's going to be very, very tricky, frankly, because on one hand, there's almost 2 weeks for the May expiry. So that's one benefit which the viewer has. But on the second hand is that the stock has already given you returns of more than 15 to 17% in the last 2-3 days. I think 1 week approximately. So I think in that aspect, it's possible that what could happen is that the stock may take a bit of a pause. It may languish at the 70 range for maybe a couple of days before it tends to get back into the thick of momentum. So momentum is very strong. Had it been a next month call option, then I think the view could have been more bullish, because then the consolidation patterns would probably get over and the stock would get ready pretty soon. Start the June series as well. But since it's a May series call option, I think it's going to be very tricky. I would suggest that wait for the next couple of days, let the stock consolidate around the 70 mark, and then watch out for any levels of breakout. I think if that happens for BHEL, then you may get into good profits on the stock price.
Okay, Kunal, I want to come back to you on this next one. Sheikh Kutin is writing in, said that he has bought Persistent Systems at levels of 1700, which is quite the attractive price, making a killing in the stock right now with it trading at 2333 or thereabouts. What he's asking is, should he book profits at this juncture? And I guess that also depends on what his anticipation or expectation from the stock was. Or should he hold for the medium term, short to medium term, in anticipation of more returns?
I think it's very interesting, and congratulations to the viewer for holding on to the stock and buying the stock even at a time that at 1700, it was not as if that the stock was available cheap. But the fact that he bought at those 1700 levels and still he held on, I think is a credible kind of a move. Now there is one very, very interesting pattern which I was looking at Persistent Systems on the monthly charts, that over the last I think 12 months precisely, from April 2020 lows, the stock has never broken the previous month lows. So I think in that sense, a best way to try and trade these stocks is to try and have the previous month low or the current month low as a stop loss of the trade, and try to hold on to the stock from a longer term view. Because if this rally sustains, say for another couple of months for the IT space or this stock specifically, then it's possible that the stock may rally up another 10 to 15% higher, which has been the average rally for Persistent Systems over the last 10-12 months. So I would say that have a trailing stop loss mechanism. You may book out partial profits over here, looking at the way the IT index and the markets are poised, as of now. But then I think a much better approach is to try and have a trailing stop loss, because the stock has not broken the previous low in the last 12 months. There is a possibility that at least this phenomena could get extended for the next couple of months.
All right, our next query is coming from Rajan Vittal. He wants to know whether it's a good time to enter NOSL for the longer term or wait for some more correction. What should Rajan do, Kunal, for NOSL?
Well, interesting stock. I think wait for corrections. I would suggest the stock is it has a tendency of rallying, then correcting back below its 50-day moving average. That's where generally and typically the rally or the correction fades out for no sell. And I think at current levels, the 50-day moving average rather is at 175, 180 zone. So I would suggest that wait for the stock to come by closer to 180 levels and use these corrections or the retracements towards 50-day moving average as buying opportunities.
All right, and with that, we come to an end of our query segment. Thank you, Kunal, as well as Vikas, for resolving viewer queries, also giving in your high-risk, low-risk ideas, and also talking about the textile sector and the way forward for that. So that was Kunal as well as Vikas giving us their take. And with that, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now, and on our BNSN quiz today, we asked you which large cap IT company saw the most new deal TCV in the fourth quarter of the financial year gone by. The options were HCL Tech, Tech Mahindra, Wipro, and TCS. The answer with $9.2 billion was TCS, and the answer was given by three of the quiz champions today. Vivek, congratulations. Neeraj Kumar Sinha, as well as Jigar. Thank you so much for participating. All three of you are champions. You've gotten it right. All right, let's look at now what the MSCI will be announcing, and it will be announcing the results of its semi-annual index review. And a list of stock additions and inclusions will also, or rather inclusion and exclusions will also be given. That usually has a bearing on several stocks here in India. Let's go across to Vivek for more details. Vivek?
Well, a whole host of stocks are likely to be impacted on the back of the announcement expected from MSCI. This announcement will include the list of stocks that are likely to be included as well as excluded from the MSCI India Index. Now remember, a whole host of brokerages have already started penciling in their expectations, and according to Morgan Stanley, this particular semi-annual index review that will happen from the end of MSCI is likely to result in inflows of $1.6 billion in the Indian markets. All of the changes that are said and that are likely to be implemented by MSCI would be effective from the close of May 27, 2021. Some of the likely entrants into the MSCI India Index are Adani Gas, Adani Enterprises, Adani Transmission. Remember, the Adani Group stocks would be major beneficiaries, and also the recent NSCI note that came in after consultations clearly mentions that the price movement criteria that some analysts were worried about would not be applicable to the Adani Group. Some of the other likely contenders for inclusion are SBI Cards, Cholamandalam Investment, Voltas, SRF, as well as JSPL, as per Morgan Stanley. Morgan Stanley also believes that REC is a likely exclusion from this particular MSCI index on the back of underperformance. So watch out for these stocks. A lot of these stocks could react quite sharply on the back of this particular development related to the MSCI.
All right. You see some information flashing on the bottom of your screen that has to do with the flows into asset management companies, mutual funds in the month gone by. Jayesh Khilnani is joining in. He's pouring through those numbers. Jayesh, what are the key highlights that you're picking up?
So first and foremost, we have received a net inflow number that is in excess of 92,000 crores. Now that is largely courtesy the open-ended debt-oriented schemes that we have on the exchanges that we have. You also have the equity funds which have shown a dip in the inflow that is in excess of 3,400 crores. Nevertheless, it is an inflow number. Remember that last few months we had been receiving an outflow number. So, despite a dip, it is still an inflow number. Now, individually, if you have a look at the categories, most of them have shown a decline on a month-on-month basis. there are few of them which have in fact shown an outflow as well. So you have the multi-cap fund, the dividend yield fund, as well as the ELSS schemes that have shown an outflow of more than 100 odd crores. But other than that, the total AUM picture also looks very stable. 32.5 lakh crores is what we have clocked, and the equity AUM stands at 9.8 lakh crores. So overall, it looks like a decent number as far as AMFI is concerned. But there has been a dip in the equity flow, so that is to be watched out for now.
All right. Thanks so much for that update, Jayesh. We'll stick with this, in fact, and we'll get some more insights as and when the call takes place with the AMFI ahead. That'll be later in the day today, and we'll get some information as far as the SIP number is concerned, also to see whether that has kept pace with what we've seen in the months gone by. Let's go across now to Ajay. We've got an interesting update from the aviation space. This is one sector which will be seeing an IPO after quite a long time. It is also a very brave time to file for a travel sector IPO given the pandemic, and we're talking about Go Air, which is likely to file an RHP for its IPO this week. Ajay is joining in with more details on that. Ajay, what are we picking up?
Well, that's correct. Fundraising in the market is back, and a lot of QIPs and offerings as far as IPOs are happening. We understand that one such company which is likely to file RHP for an IPO, very interesting one, is going to be Go Air. So Go Air, which is the one of the important domestic aviation companies, is likely to file for a $500 million IPO this week. And we understand that all the paperwork has been complete. It's very interesting that Wadia Realty is the promoter of Go Air, and they are likely to dilute their stake, and almost anywhere between 3,500 to 4,000 crore is the kind of number they are aiming at raising. We understand that Khaitan and Company and AZB are the legal advisors on this particular transaction. And if you talk of merchant bankers and lead bankers, it's Citi, Morgan Stanley, and even ICICI Security, we understand, is part of this particular transaction. Now, it is also interesting that it comes at a time when a global pandemic is actually hitting the world. Aviation companies are at the bottom of the cycle. So we understand that the initial discussion with the funds of bankers are actually happening. And they've actually got a very good feedback of response, because it's very good in investment terms to get into a investment at the bottom of the cycle or when it's going through a rough patch. Of course, the debt reduction is one of the focus areas of this particular fundraiser. Not only that, they're going to order new aircraft as far as expanding their fleet is concerned. They have been doing pretty well. In fact, if you look at the last few quarters, you will see that their market share actually gone up, almost 11% now. And not only that, they've added new cities as far as the entire length and breadth of the country is concerned. So this is likely to happen this week. Go Air is all ready to go on the IPO runway.
All right, thanks so much for that update, Ajay. Let's go back to the AMFI data that we've got for the month of April. And we're joined on the phone line now by Swaroop Mohanty, who is the Chief Executive Officer at Msci Asset Global Investments. Thank you so much, Swaroop, for taking the time. I'm guessing that you've seen the numbers, at least as you've had a cursory glance as we have at the numbers. There seems to be a net inflow, which is quite a substantial number, but it seems to be mostly coming in from the debt schemes. What, according to you, is playing out that you see? And we've also seen a small inflow from the equity mutual funds. Is that giving you some sense of comfort?
I think, as the volatility around our lives increase, there is always a flight to safety. If you reflect on the first phase of COVID, this is practically reflecting the same thing. In fact, one is happy to see that the equity numbers still remain positive, and it's natural at these times that the debt numbers will go up because the mood will be that, right? And when you look at the severity at which all our lives have been affected, that we still continue to look at investments positively is a good way of looking at life, I would say. But I'm not surprised by the numbers, though very honestly, I'd expected the equity numbers to be a little higher than what they show. But I'm told that, the inflows have been a little less than the earlier ones, so that is understandable. But if you ask me, I had expected post-March, if you see what we came off from last month was a very big number, so I'd expected this number to be a little higher than what this is. So I'm a little surprised that it being only 3,000 odd positive. I thought it should have been more than that.
So let's talk about it just a little bit more. And you've probably looked at the subcategories within the equity segment also. Is there anything in particular that surprised you on the downside?
I had expected a little bit more inflows on the large cap side or the flex cap side. That the mid cap is outperforming that side. I think in such times a little bit of a contradiction if you ask me. But if they're coming in a certain manner, I will take it as it comes. I think I would have been better off if seeing more money in the top end of the core portfolio of the investor at this moment, which was not the case.
Absolutely. Thank you so much, Swaroop, for taking the time. That clarifies at least some of the things that we wanted to know. Of course, that SIP number will be key to watch out for as well. Have a great day. That's all the time that we have on this edition of Buy Now, Sell Now. Though, do stay tuned. There's lots more coming up over the course of the day, starting with markets at noon in just a short while.